Is real estate cash flow dead? Are people still relying on real estate cash flow to make money in real estate? That is what we're talking about today in this episode of the Never Lose a Deal podcast. Welcome. I am your host, Lorillia Brown-Phillips, and today we are going to dive into real estate cash flow. Is it a myth or is it real? For those who are new to the show, this show is for real estate investors who desire to leverage creative finance to be able to expand and scale their real estate portfolio. So let's get into it. Now, before I go deep into this conversation of real estate cash flow, right now, as I film this podcast episode, you may be listening on one of the podcasting platforms, or you may be watching from YouTube or Spotify. But with that being said, we are at a very interesting time. There has been some attacks on other countries. And although this episode or this podcast doesn't really talk about things that go on in politics or in other parts of the country, unfortunately, this industry does get affected by things that are, I would say, outside of the control of real estate. So with that being said, I've had conversations over the weekend with potential clients as well as clients, because now we are in a interest rate season where investors who bought properties in 2023 or 2024, where interest rates were higher, are now looking to refinance. But with that being said, let's consider, and this is what I've told those investors, let's consider that even with interest rates are higher, meaning that if you bought a multifamily in 2023, 2024, you may have had a higher interest rate. But now with interest rates being lower, you can be a candidate for refinance. Hint, hint. If you're someone who is looking to refinance into a lower rate, feel free to go to the show notes. You can go to funds.neverloseadeal.com to be able to submit your deal so you can get a loan scenario term sheet. But with that being said, lending criteria is what I'm noticing with a lot of the lenders that I'm working with, is that the underwriting is getting very conservative. So things that you may have noticed in 2020 or 2021, they're not going to fly that well right now. This is now a time where you as an investor, especially if you have a portfolio of assets, want to begin to do an asset stress test on what it is that you currently have. In a previous episode, I did do a podcast episode on debt stress tests. And now more than ever, you want to be that investor who does consider taking that into account, whether you want to refinance or not. But with that being said, let's go into today's topic. Is cash flow dead? Can you actually cash flow real estate assets to make money? Just want to sit for a moment in that statement. Can you cash flow real estate assets to make money? The reason why I decided to do this episode is because someone had shared with me a video of a young person. And the reason why I say young person, because investor or business owner, definitely looks younger than myself. Someone being a person in their 50s. Talked about how um, they owned a portfolio of assets, and of those portfolio of assets they own, they were not making money. Of course, I'm giving you the abbreviated version. And with them saying they didn't make money, they had advised that there are other ways in business that they can make money, because they talked about no one tells you about when the pipes bust, when the toilets don't work, and all the things that encompass with buying real estate and being an investor. I wholeheartedly agree with what that young man was saying. But this is the point that a lot of people miss. And it's only, I notice on the internet, that a lot of this misinformation is put out there. When you want to, and let me preface this by saying one thing about me, I'm going to cite my source. So this is not Lorillia isms. This is not what I think. This is a source. When you invest in real estate, for example, a portfolio of properties, the goal is not to make money. Let me pause right there. What do you mean, Lorillia? My guru, my mentor, my coach, or whatever said the goal is to make money. Well, not according to the IRS. That's my source. When you invest in real estate or have a portfolio of assets like that young man said he did have, according to the IRS, it is considered passive income. Your goal, if you are desiring to own a portfolio of assets, should not be that I want to make money, because that is considered, once again, I'm going to cite my source, not Lorillia-isms, that is considered active income. According to the IRS, there are professions within real estate that are considered active income. What does that mean in layman terms? Meaning, when you make money in these areas of real estate, they are automatically going to categorize it as active income. What are those industries? I will name a few: a real estate agent, a mortgage broker, a rehab investor who fix and flips, a wholesaler. Those are just four. When an investor or real estate professional generates income from four of those sources, like I said, there may be others, the IRS considers that active income. Active income is to make you money. So when I hear people, and not just the gentleman who made that video, but people on the internet who are telling other people, and let me say this in very in a very sympathetic way. It is easier to sell a person a lie than to tell them the truth. A lot of people have been sold lies, which is why I saw something on a social media site, and I'm going to get back on track, but I wanted to share this with you. The person had wrote, "Why is real estate new construction, or should I say construction, um, or a new construction development, the most gate kept industry in real estate?" Now, I commented and said, "It's not gate kept. There's nothing gate kept. We live in 2026. For a person to say information is gate kept is because they will not pick up a book, they will not go to a class, They will not find a third party source. They are just relying on a person who did a free live video online. And don't get me wrong, do I do free videos? Of course. But I say that to say, if you, as the person on the other side of the computer or your cell phone or your tablet or whatever you're watching, is only using what it is, or even if you went into person to the mastermind in the class and you are only using that form of reference to be your now conduit to get into something, you may feel like you are gatekept. Because just on the financing side, and I do assist investors with new construction. And let me correct that. I don't assist new investors who are new to real estate. Let me clear that up. The reason why is because the moving parts that are involved in someone who wants to do a new construction project is more than just, I need the money. I tell investors all the time, the money is the easiest part in real estate. Don't let the internet fool you into believing it is hard. That's why I tell people, go to Google. If you're looking for a lender for new construction, go to Google. Just put in lenders for new construction. You will find thousands of them and find out ways that you can work with them. But let me tell you the missing ingredient, because for years I have been talking to new investors who desire to get into real estate, as well as seasoned investors, because you have those investors who may have been working in one area of real estate and now want to move on to another real estate area of real estate. As you move up in your real estate journey, a large portion of what you're going to do is going to be based on numbers. That is why now on the internet, and I said I was going to do a whole show on that, but I'm just going to touch on it here. There is a difference between buying a house and buying a deal. The internet has misinformed people to believe that just because you're buying a house, you're getting a deal. And that's not the case. Because when you're buying a deal, it is all based on numbers. And so there are people who are desiring to get into new construction and they don't know numbers. So they're thinking that they are new to this area of real estate. They have never did it. They've never bought a home. They've never did nothing. And they think that there is a lender out there who is going to allow them to play monopoly with their money. Like I said, it's easier to sell a lie than to tell the truth. What I'm saying is the truth. You can go right now on Google, you could put in new construction, you will find thousands of lenders. Find one where you're going to say you've never did real estate, you've never did deals, you have no money, and you took some class or what have you, and they said that you can do this, that, and the other. I'll wait. So it's not that the industry is gate kept, is that a lot of times people have been told misinformation based on one person's experience, but is not the industry. The industry is not, lenders who are in new construction are not lending to people who have never did anything in real estate. And if they are, so much of your money has to be added into the deal where they do not feel the risk of loss. So are there exceptions of the are there exceptions to the norm? Yes. But the amount of money that you would have to put into the deal just for a lender who is lending on that new construction to say they feel comfortable is not what the average person has access to. Many people have been sold that they can do new construction as a no money down strategy. And like I always tell people, if you know someone who's selling you that, you need to go to them. I do return to sender. Whoever told you that, hold them accountable. I'm going to sell their class for them. You sign up for their class, you get their coaching, you do their in-person events, you do whatever is necessary for you to figure out that they are telling you that there is a pot of gold that will not require risk. You don't have to put no money in. The lender is going to put it all in. By all means, like I said, I'm going to sell their course for them. You go ahead at it. And that leads me to back to what I said, because like I said, I didn't forget why we were talking about what we were talking about today. But owning a real estate portfolio of assets is categorized under the IRS as passive income. So how can someone say, I was looking to make money. I did not make money owning all these portfolio of properties when the IRS is saying it's not supposed to be active income. It's supposed to be passive income because the goal with passive income is to offset your active income. That's why real estate is a great asset. It's a great asset class because it allows you. This is the gift from the IRS. It allows you to take that passive income and offset it to active income. Now, of course, I'm giving you the very abbreviated layman terms example of it. Are there things to take into consideration? Yes, but you get the lovely depreciation and all the other extras that goes along with it. And we're not even going to talk about phantom income. I've talked about that in other episodes. So do not let people play in your face on the internet and tell you things that do not make sense in the real world. The goal is never to hold a portfolio of assets and have them as active income. So the two can operate the same in space. You can't say I had a portfolio of assets. I wasn't making no money, but the IRS says it's passive income that you're getting from these properties, but you want it to be active income. And then the person goes on to say, oh, now that I'm in this industry doing this in business, I'm making money. Yeah, of course you're making money because that's an active income activity, according to the IRS. It's considered active income. Of course you're going to make money. So I say that to say, ladies and gentlemen, even with everything that is going on in today's world, real estate cash flow is not a myth. The only myth is that only on the internet, and like I said, it's really on the internet. I've never heard some of the craziest things that I hear offline. And I'm talking about being in rooms where you got your new investors, your seasoned investors, and people are just making up stuff. Because the reason why it's hard to do offline is because unless you create your own community where you just shooting off crazy stuff, it's harder to magnify. So that's why the internet is easier and social media. So I say this to say, be very clear on your goals. Know what your future goals are. Know what it is that you plan to do for the future and see how owning real estate makes sense for you. Now is not the time to decide on which asset class is better. is investing in real estate, I mean, is investing in stocks or investing in crypto, or should I be in real estate? By all means, I'm not in those other sectors, but I will say this. Um, if you're doing real estate and you're doing it with the goal of owning a portfolio that will generate you income, understand it as passive income. Another conversation that I've seen a lot online is where a lot of people say, "Well, I don't have 10 years. I don't have 10 years to wait for equity." And I get it. You can build equity, and not I say but have built-in equity when you buy, but that goes into, like I said, a whole separate episode. You got to know how to find a deal. Buying a house at retail, of course, you have no equity. But if you buy a deal, you can create built-in equity. And that is what this show is about. But I will also say this. When the person says they don't have 10 years, I want to leave you with this perspective. We are now in the year of 2026. 2020 was 6 years ago. We are closer to 2030 than we are to 2020. I just want you to sit with that for a second. So imagine if you were that investor who bought in 2020 when interest rates were low, money was fluid, deals were out there, even if you didn't buy a deal and you just bought retail. We're closer to 2020, I mean 2030. That's your 10 years. That's your 10 years. Like I said, what's the source? The calendar is the source. So I want to leave you with that as always. Um, you have a loan scenario that you would like to discuss, please go to funds.neverloseadeal.com. It will be in the show notes or underneath this video on YouTube. Also, my monthly webinar is coming up. That monthly webinar is not about how to buy real estate, how to get funding, how to get investing. It's for investors who want to build out, scale out, expand their portfolio, and they want to tap into the $40 trillion of asset-based lending that is in the marketplace that is circulating. And if that sounds like you, it will be, like I said, you just go to funds dot neverloseadeal.com, or you can just go to neverloseadeal.com, and that will immediately put you on the list. So if you want to tap into that $40 trillion in asset-based lending, and you want to see how it can help your portfolio, everything will be, like I said, in the show notes, or if you are on YouTube, it will be below this video. As always, I am wrapping up this episode of another uh, of Never Lose a Deal podcast. Until the next episode, I will see you then.